The theme for 2014 was shareholder return, as companies set records and bought themselves an EPS tailwind. Hi, I'm Howard Silverberg reporting from S&P Dow Jones Indices in New York, and I'll be connecting the dots on buybacks. S&P Dow Jones Indices has just released their S&P 500 fourth quarter and 2014 stock buyback report, and records were set. Specifically, S&P 500 companies spent $553 billion on buybacks last year, up 16.4% from the $476 billion they spent in 2013. Buybacks were a short-term win-win for the market in 2014, as the additional buying helped support stocks. Even more relevant to the stock price was that in each of the 4 quarters, over 20% of the S&P 500 issues, that's 1 in 5, reduced their share count by at least 4% year over year. That means they increased their quarterly EPS by at least that amount. We view the 4% mark as significant, since at that level, the lowest share count impacts earnings per share, which in turn impacts PEs. Dividend payments, which set their 4th consecutive year of double-digit increases, amounted to $350 billion, up 12.4% from the $312 billion paid out in 2013. Together, shareholders received $904 billion directly and indirectly from S&P 500 companies, a $116 billion increase from the $787 billion that was returned to them in 2013. The increase in expenditures, however, does not mean companies are being generous, just that shareholders are getting more in dollars, not necessarily more as a percentage. Payouts for dividends remain low, as only 37% of GAAP earnings were paid out as dividends, which is much less than the historical 52% rate. Buybacks at $553 billion for 2014 were still short of the 2007 all-time high of $589 billion, even as companies reported record amounts of cash on their books at the end of the year, over $1.3 trillion for the industrials alone. All that cash is what's attracting many outside activists as well. Activists who want the company to use that cash, for the most part, for buybacks and one-time special dividends, both of which are more short-term in duration. Given the current levels, available resources and pressures, and even with less than stellar 2015 earnings estimates, 2015 appears to be set to post a new record for shareholder return. First quarter dividends are poised to post a 14% gain over last year and set a quarterly record, and companies need to buy more shares for expiring options, with share count reduction becoming more expensive. Bottom line, 2015 could come close to that $1 trillion mark. We'll keep you posted. For the full buyback release, please go to www.spindices.com. This is Howard Silverberg from S&P Dow Jones Indices. Thank you.